afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Markets Now trading event, specializing around the market analysis and economic impact report breakdown. Hope you're all doing well out there, and good afternoon to everybody out on the YouTube side of things as well. It's a pleasure to see you all and be back in the hot seat properly after a literal hot seat all throughout last week. Last week in England, if you were not aware, we faced some record-breaking heat. It was insane. It really was. It felt like you were bloody abroad. It was so hot, and yeah, the office up here on the third floor of the house, it was just unbearable. It really was. It was terrible. So, decided to take a little bit of a step back from active trading and stuff like that, and just ran a little bit of a chilled service for everybody inside the trading room. But this week we are back fully in the mix of things, which is good, and the temperature's broken, so it's much cooler now, which is amazing. We're all much happier here now in England at the moment, until it gets back up to 32 next weekend. That's all good. Good afternoon, Ancient Sea. Good to see you, man. So yeah, it's been all right. It's been okay. We made it through the other side, so yeah, we're all okay. Now, we have got a bit of a itsy-bitsy trading week this week. We've got a 4-day trading week because it is the US Independence Day weekend. And so it's a big bank holiday, one of the most important ones of the year, on Friday. We have a bank holiday Monday on the other side of the markets as well, due to the Independence Day weekend. And we also have the founder of the UTC, i.e. myself. It's his birthday this Thursday. So so we've got an NFP on Thursday, but I'm out of office from Thursday afternoon. Anyway, I'll be coming online in the morning to do a Friday flashback session on the Thursday morning, because the markets will be shut down on Friday, the exciting markets anyway. So that will be that. So predominantly services are running from Monday through to Wednesday afternoon. And then we'll be taking a nice extended weekend, apart from obviously the Thursday morning, where I will be providing the last Friday flashback of the week. And that being said, we still do have non-farm payrolls, which are coming out on the Thursday afternoon. Thursday it does include obviously the US employment data, not just the non-farm payrolls, but the whole batch of employment data as well. So the US non-farm payrolls, average hourly earnings, the unemployment rate, the full shebang is all out then. We are looking at relatively stable data. The previous figure was 172, but it was a complete and utter non-impact event. This time around, we're looking at around 110k. I reckon it's going to be around 140. And again, team, it most likely it will be a complete non-impact event. So I would not be anticipating there, to be honest, to be much of anything happening as a result of that. And unfortunately, there's nothing else going on. We don't have anything else going on in terms of the Fed. We don't have any minutes out. We do have Christine Lagarde providing a speech at some point from the ECB. We also have the European CPI, year-over-year rates, as well this week. Both of which I think are not going to really shape too much in terms of market sentiment. But they are happening. It is worth knowing that they are dotted around sort of earlier on in the week. Now, in terms of what everybody is talking about at the moment, oil prices. We are currently trading down at around 73.65 for Brent. Crude is just hovering around the 70 level. And both of these are doing very, very well to the downside. We've had absolutely extreme sell-offs. Fuel prices are now normalizing, and all of that chaos and carnage is coming back into a sort of a nice, timid flow. The discussions between nobody really knows what's going on, do they? But the discussions, from what we do know, between the US and Iran and the rest of the Middle East are all going well. They are all easing, and the hot heads of before are sort of slowly coming to a bit of an end, which is fantastic. So that's going to be good news all around. Good news for markets. Consistency. We're going to see some volume back in the markets again. possibly even see a little bit of risk on coming back into play. Not yet, of course, but down the line, that is what we could potentially see. If we look at metal markets at the moment, gold is currently trading at 40.42, and it has sort of continued trading lower at the end of a big cycle to the downside. So there is that to contend with as well. Excuse me. So yeah, there is that to consider as well. Silver at the moment is currently trading at 58.29. It's down 1.54% this week so far today, considering we are this week. But that is after reaching a high up here of around 89.40 in recent history. And that one still looks like it wants to go lower. I think there is an opportunity for it to go back down to the previous lows, as I say in the market report, before we take the push back up to 59.39. We will cover this one in the market report coming up in a moment anyway. But it's all kind of tying in, isn't it? It's all tying into the geopolitical sort of sentiment shift that we are in the midst of right now. Good afternoon, Matthew. Good to see you, buddy. Yeah, so it's all tying in. It's all tying in. Now, in terms of the market report, let's actually get over to that market report. I believe I'm sharing it. Am I sharing it? I think I'm sharing it already. Yeah. Okay. So let's have a look at the market report. So, NAS 100, Aussie dollar, UK Brent, and silver are this week's trading opportunities. All selected because I believe they are going to be decent trading opportunities because they are trading all away from or directly into nice points of liquidity and will provide those decent money-making opportunities. Now, the breaker structure for UK Brent is potentially seeing Brent to continue its sell-off back down to the next major point of liquidity. This is the one that was outlined last week. So I do believe that this week may hold the key to that continuation back down to the floor. Silver, looking at the continuation back down to previous lows. It literally just spoke to you guys about this one. This is silver on the chart ultimately. So we're looking at the sell-off back down to the previous lows here for the continuation back up. Maybe we get to the breaker structure point. Maybe it does instantly trade long and then break structure and then go up to the highs there. Either or, we've got a couple of decent trades in here. We've got the trade from there to there, or we've got the trade from there to there. Either trade idea is really quite nice and well laid out. We've got the Aussie dollar trade. That is the predominant breaker structure trade between this level here and the level above. So that's the trading margin of availability there. Quite nice. And then finally, we've got the NAS 100. Now, I wouldn't necessarily be looking to take the NAS 100 on a 4-hour chart. I mean, most of you guys by now, you know the way it works. It's a 4-hour chart or a daily chart we're looking at when it comes to the US indices. That is the week-long bias. It's about breaking it down on the lower time frames and, essentially doing our best to try and take as much of that profit as possible. I wouldn't generally be in the realms of wanting to take it on the 4-hour chart and just, running it throughout the week. It's not really how I work. But nevertheless, some not bad collection of trading opportunities here. Every single one, the key theme to all of them is the fact that we've had big commercial sell-offs. Lots and lots of money being dumped off. And now I believe we've got a couple of things happening. We've got profit taking, which happens at the lows, creates the dead cat bounce. We can trade the dead cat bounce, take the profit, follow the trend continuation comes on side, then we can jump back aboard and ride the train. So very old school kind of strategy setups. We're just using liquidity flow to get ourselves there. That's kind of what I'm thinking here. And it's all broken down into nice bite-sized intraday chunks. So we're not going to be looking at taking these trades and then being stuck in them for the next couple of weeks and not really knowing what to do. So that's those. Now, in terms of the market challenges, we've got the Euro CPI coming in at a 2 out of 10. And the US employment data on my algorithm was only registered as a 5. That's the entire collection of it. Non-farm payroll, unemployment, average hourly earnings, exec non-farms as well. So it's telling us that really we shouldn't be expecting much. Maybe a spike in the US indices, but no real follow-through, no consistency from it. And markets will probably end up back where they started. Now, in terms of moving down into the SSV down here, this is immensely balanced. There's two notable callouts. The VIX, obviously almost 40%, is incredibly low. So we're talking very, very, very diminished levels of market volatility. The other notable call out is UK Brent, actually, because UK Brent last week, when running the numbers, even though UK Brent wasn't part of the market report forecasts, I still looked at the numbers, because I have a whole tab on my end and it registers loads and loads of trading assets, and then I just choose which assets to put in to this cell, obviously when I create the report, based on the trading opportunities that I've chosen to take. UK Brent last week was at 55%. So if we're thinking about, that's a 6% sell-off. So that's a lot of liquidity which has changed from long to short over the course of the last 7 days or so. Big jump down. So it'd be interesting to see where UK Brent lands, because I think it probably will have the legs to continue trading lower back into the 70 margin, as I mentioned for UK Brent before. Currently trading at 73.70. So at least another 350 to 400 pips lower before we find a bit of a bottoming out stage. That's what I think. Now, moving down into the economic and order book impact report, we've got a bunch of things going on here. Oh, look at that. We've got my birthday. My birthday is going to impact the markets, and it's on a 10 out of 10. We've got US employment data at another 5 out of 10. ECB President Lagarde at a 2 out of 10. And the European CPI year-over-year figure at a 3 out of 10. And the monthly one didn't even register. We do have the the Euro CPI monthly figures this week, but it didn't even register as an impact to the market. So that goes to show really just how powerful it is. But my birthday, ladies and gents, that is what you're going to be waiting for. Thursday morning, 7:13 a.m. That's the one. Markets are going to absolutely spiral when I turn a year over. So get ready for it. Moving on down to the MFT, we've got pretty balanced commercials. Yeah, I mean, there's nothing to shout out about that at all, to be honest. Nothing at all there. Equities this week are actually quite interesting. We have a real nice selection of equities. It's a pure coincidence that 3 out of 4 up here are all beginning with C's. So you've got CLS, CRDO, CWAN, and then we've got the AVAV. But all looking very, very nice at the moment in their own respective fields. I decided to put the spotlight as one we've had a couple of times before. This is Astera Labs, and it's one of the fastest growing beneficiaries of AI server expansion. And it's a real interesting stock, so please feel free to go and check that out. In terms of the institutional buying interest by sector, AI infrastructure is number 1. Defense falls down into number 2. Remember, defense has been actually at the top for the last 3 market reports in a row, so that's almost a month in the number 1 spot. Number 3 this week, interestingly, is grid infrastructure. Now, what falls under grid infrastructure? This is things like government infrastructure. This is power infrastructure, and whatever it may be, whatever field it may be. But that's an interesting one. We haven't actually had that in there at all before. And that got $2.9 billion invested in by hedge funds. And whenever a hedge fund takes positions like that, or a collection of them take positions like that, it's worth noting. It absolutely is worth taking notice of, because they're just at the top of their game. So if they do something, we all want to be paying attention. And then the number 4th spot is cyber security. And you put obviously cyber in there, but that is cyber security. And that's that. That is the market report this week, ladies and gents. So, disclaimer time. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. Okay, so please, if you are interested to see more about the disclaimer or the T's and C's or anything like that, please feel free to go and do so. www.the-utc.com, and you can find out all the info over there. Thanks a lot. Right, let's head over to TradingView and have a look at this afternoon's US Open, which is on the horizon. Okay, so let's move on up. US 30 Dow Jones, 15-minute time frame. Actually, I'll tell you what, I'm going to quickly take a swig of coffee. There we go. So US 30 Dow Jones this afternoon is not looking superb. We do have a semi well-established ceiling and a relatively well-established floor. I will say that. But the recent price action all along here has just been so slow. And I mean, this goes all the way back to Wednesday last week, doesn't it? I mean, that is just a real mess. We haven't even made it up to the big point of liquidity up at the highs yet either. So that's going to kind of disavow any potential trade ideas from here. We don't want to take any shorts from 52.11 yet because the market hasn't hit liquidity yet. So the only way we're going to be able to run this out is if we have, well, this is the breaker structure point. The market is going to have to come up first. So it's going to have to breach this area and then push back down. And then what I would say is probably not looking for the move all the way back down to 51.45. I just don't see that realistically happening today. But I do think that the market could certainly have a look at this area around here as a target profit. So then we go for the short between these two areas. Something like that. 1 to 3, 1 to 2.87-ish. Yeah, something like that. I think that's it. I don't think that's too much of a bad trade. It's the best of what we have to work with at the moment for this US 30. That's what I would say about it. Now, next up, the NAS 100. Of course, we have this week's market report trading opportunities set out for the general bias, but I would think that for the actual trade of the day, probably going to make a few minor adjustments, i.e. the long from there to there with the stop loss at about here for a 1 to 2.84. For a short, yeah, so the short breaker structure is about here. That's yielding a 1 to 4. Not really too interested in that one, so let's bring that down to 1 to 3.4ish. That's going over the 50% level between the breaker structure and the high there, but still the risk reward ratio is very significant. So I'd bring that down possibly, or well, bring the risk reward ratio down, put the stop loss up, whichever way you want to read it. I'd do something like that to, yeah, balance out the risk reward a little bit, increase the success rate of the trade, and have that as a 1 to 3.2. But both of these trades are very, very much intraday. These are not really stock market open scalping trades, that's for sure. But yeah, I mean, they work. They're nice trades, nevertheless. So let's get that downloaded, and then we've got the S&P. I mean, the NAS 100 is looking really nice at the moment. The US 30 Dow Jones looking messy, but I think that's a decent trade in there. The S&P 500 is looking very much like the Dow Jones. It's looking very messy. So I'm not entirely sure it'd be worthwhile having the S&P on side at the same time. So if we say have that as the ceiling, have that there as the floor, it just doesn't make sense. I think I'd almost, yeah, I think I'd almost like that there to be the breaker structure point for the short, and that's on the basis that price goes up and gets the breach into big liquidity first. So let's say 1 to 3 on the basis that the money breaches this area up here at around 74.38 first. And I wouldn't want to be taking the S&P and the US 30 Dow Jones at the same time. It would be a choice of one or the other. Okay. But that would be those. Now, let's have a quick scan of the energy markets. Natural gas, unfortunately, isn't a major contender at the moment. It's still doing what it does. We've got UK Brent currently trading 73.54. There is no reason at all that we cannot consider putting this as a pending order yet. Okay, so we certainly could. Looking at around a 1 to 3. We've got the stop loss up there at 73,397. We've got the target profit at 68,870. I mean, it's a really nice looking trade. There's no reason we can't line that one up as well. Metal markets. Let's have a look at the silver trade. Again, there's not really any reason we can't put this up. It's ready to go in our portfolios as well. That nice little 1 to 2.6 up there. I mean, we're not that far away from it now, so it doesn't. It makes sense. It makes sense to include it. So let's do that as well. We've got the Aussie dollar trade. That's nowhere near the access point to that one at the moment, so we will give that one a little bit of a pass right now. Don't like that anyway. Nope. Nope. No, definitely not. Right. Yeah, so that's about it. That's about it, I would say. So we've got silver. We've got UK Brent. We've got the Dow Jones, NAS 100, and the S&P. AC agency. Yes, of course we can. Aussie CAD. So 2 halves of a range here. We've got this area in here. We've got the ceiling up at the highs. And we've got the floor down at the lows. Down there. So it looks something like this. You've got the range floor. The range ceiling. And then in the middle we've got the median. So that's how we would break this down. Now the breaker structure point, if you did really want to trade the A and C, is there for the long. Breaker structure for the short is here. Okay, so that's your 2 halves. Breaker structure long, breaker structure short. Yeah, and you take it from there. I mean, yeah, that's the layout for it. I just don't think I'd be too keen on it right now. But possibly after we see where today ends up. I can send that out to you though, H&C I can send that analysis out to you in the Traders Lounge. Wait, hang on. Let's just send that in there. And then you can refer back to it as time goes on, if you so wish. There you go. Yeah, no problem at all, buddy. You are most welcome. Right. Okay then, ladies and gents, I'm going to wrap things up there then. We are currently at 7 minutes to the top of the hour. Not long to go before the US bell rings this afternoon. Remember, it is Monday, and the markets will be holding their breath for the non-farm payroll. It doesn't matter if it's going to be a non-impact event. It's about the possibility that it might not be. We all know it probably will be, and it usually is nowadays, but it might not be. And that's what the markets hold their breath for. They hold their breath to see the data. They hold their breath to see how the Fed may react to the numbers and what that means for monetary policy. It still matters, even if the markets don't react, because let's be fair, they don't. It still matters. The data still matters from an economist's point of view. And that's what they're all waiting for. So it will be a bit of a waiting game for Thursday. Let's see what happens this afternoon. Remember, we've got our trading plan. We know what to do for when the market does what it's going to do. So let's just be patient and let the market do it. And apart from that, if you need me, I am here. Now, ladies and gents, this is for those of you out there on the YouTube side of things in particular. If you are not yet a member, I don't know why. It's a great bag of fun in here. You can join as a free member and you will gain access to a stream a week on a Wednesday afternoon. The general chat is generally ticking over with bits and pieces of analysis and chit-chat going on between the other members. And if you are interested in becoming a real UTC core member, being available every single day in the streams and taking all of that information through the daily live trading events and so on and so forth, then please feel free to do so as well. No strings attached. So take care, guys. Have a good one. Have a great trading week, and I look forward to catching you in the trading room. I'll see you then. Thanks a lot. Bye-bye.